Let's take a look at the markets now. Asian markets surged in today's session, tracking U.S. markets, with tech stocks in Hong Kong doing particularly well on the day. The Nikkei share average closed up 1.2%. The Hang Seng Index rose by 2.46%, while the Shanghai Composite Index ended the session up 0.11%. U.S. stocks continue to attempt a recovery after Friday's positive close and a tough, volatile week beforehand. Traders were digesting a lower-than-expected retail sales reading, while some quarters criticized Treasury Secretary Scott Bessent's comments that seemingly downplayed concerns over the stock market's massive retreat in recent weeks, with him stating that market corrections were healthy. The Dow Jones Industrial Average rose by 0.85%. The S&P 500 closed up 0.64%, while the Nasdaq Composite Index ended the session 0.31% in the black. Well, here at home, we see that the all-share index is trading in positive territory. It's currently up by 1% at 89,467 index points. On the currency, we see that the rand is trading at 18.05 against the US dollar, 19.75 vis-a-vis the euro, and 23.47 against the British pound. In terms of commodities, we see that gold is trading at over $3,000. It's at $3,024 an ounce. Platinum at $1,003 an ounce, while Brent crude oil is trading at $72.05 a barrel. Well, for more on the markets, let's now have a conversation with Makwe Masilela, Chief Investment Officer at Makwe Fund Managers. Thanks very much, Makwe, for joining us. So were you surprised that the U.S. Treasury Secretary could be so blasé about the massive loss of value, particularly on U.S. markets, when to all intents and purposes, it's been quite substantially influenced by the administration's policies?
I was not surprised at all, given that the guy himself is a former hedge fund owner, founder, so he does understand how the markets operate. And sometimes as market participants, we get to have some form of knee-jerk reaction. And yes, this correction that we've been seeing now lately, it managed to help some of the insiders and mainly here the executives of those companies, because they took advantage when those stock prices dipped and started buying more. But the question here still remains that if all these policies that markets are acting to, they start to have a negative impact on the economy, then probably will have to withdraw the kind of comments that he made. Already we've seen the likes of the OECD starting to reduce the economic growth forecast, not just for the US, but for the global economy, all because of those trade tariffs that the guy is imposing. And let's hope that maybe when they start cutting taxes, stuff like that, maybe the economy will start doing okay. I think for now we should give him a benefit of a doubt. The problem will be if the real main economy starts to be affected negatively, and chances are it might be affected negatively because already people are talking about a possible recession.
Yeah, indeed. So to what extent are you worried about the difficulties between South Africa and the United States and how they may filter through into our markets, specifically the rand, or are you actually more concerned perhaps around the livability or survivability of the GNU, because that has been sort of the issue that has kept our local market fairly resistant, our rand, our stocks and so on. When we've seen other markets going down, we've managed to still hold our own.
By all means, and I think for now I'm more concerned about the GNU more than the tension between us and the US, Maybe up until we see them suspending the likes of AGOA, then one will start to be more worried. And we know that this kind of noise, it comes and go. But yes, about the GNU, you are right that all these positive investor sentiments, consumer sentiments, business confidence, they were all at the back of the GNU, and mainly because we expected them to start accelerating the reforms when it comes to the necessary economic reforms. But yes, we hope it holds, because if it doesn't hold, then definitely all the hopes that we had for right or for wrong reasons, unfortunately, will collapse.
Yeah. So we heard yesterday that Standard Bank's Deputy Group CEO Kenny Fiedler has tendered his resignation there and is now headed to ABSA in 3 months' time. He's going to be the CEO there. Were you surprised, and how do you see this move impacting both banks?
Surprised, and because remember the second in charge now becoming the first in charge at ABSA and resigning on a Sunday, you ask yourself how long this whole thing has been in the making. It was just because the guy was just approached and then he accepted the job. And of concern as well for us is that as much as it's on garden leave, I don't think at that senior level 3 months enough. I think you should be giving somebody enough restraint and garden leave to the extent that whatever he knows about, say, Standard Bank, it gets to be outdated, because if it's still fresh in his mind, then definitely the guy will implement this new job, unless or maybe indirectly you are telling us that the guy didn't know much. So as a result, whatever that he knows about Standard Bank is not an issue, even if maybe he might want to try to implement it at ABSA. But it was more of a surprise these 3 months, what you call it, a garden leave. I mean, we expected anything just over 6 months or so, because we are worried that he knows the secrets, because he was the second in charge, that he will immediately implement them when he gets into his new job. But yes, it is a good win for ABSA, because he's a very good guy. He knows his story, his performance, his track record has been good so far.
And Standard Bank, Sim Shabalala did indicate that as much as it's a heavy blow that they're losing him, he says that there's a decent enough talent pool at Standard Bank to replace him if needs be.
Definitely, he's got a point. As much as he was second in charge, there were almost 3 other guys as well who stand a good chance. And maybe that's also one of the reasons why it was easy for him to accept a job at ABSA. That, listen, I'm second in charge, but definitely there's some serious competition. So I might as well, take the opportunity and be the first in command when it comes to ABSA.
Yeah, sort of makes sense. And then lastly, of course, it's results season in South Africa currently. Old Mutual, they came out with their annual results for the 12 months ended December 2024. What's your comment on their performance and whether you think there's merit in them investing in Old Mutual Bank?
I think the merit will continue to be there given the performance of other banks, especially the digital banks. And yes, the guys managed to benefit mainly from your Old Mutual Insure, good contribution, right premiums rating there, and also managing to benefit from their wealth management, Old Mutual investment. That was good for them, and that also benefited from equities. I mean, looking to the asset under management, up 10% to almost 1.5 trillion rands. Also, their gross premium up almost 7%, 27.3 billion. I guess that's decent, and only because they managed to continue to get more clients and also a robust performance when it comes to their risk business, risk transfer business, and their profits as adjusted headline earnings per share up 17%. For me, that's very decent.
Excellent. Thank you so much, Makwe, for your time. As always, that was Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. We're going to take a quick break.